I mentioned yesterday that yesterday is the first bull day in 5 days, and that on the daily chart, this looks like a bull flag, and that we'll probably get one more push up. I don't know that we will, but it certainly looks like a bull flag. We got a bull trend, and we went sideways for 6 days, and then yesterday we had a bull body. By today going above yesterday's high, which we just did, we triggered the bull flag. Traders are going to pay attention to the first few bars of the day. Like yesterday, we had, if they have big tails, like the first few bars yesterday, today will probably be more of a trading range day. And instead, if we start to get big bull trend bars closing on their highs, we'll probably get a bull trend day. Yesterday is a very small day, and that always has an increased chance of being an outside day. So we trade above yesterday's high, reverse down, trade below yesterday's low. Daily chart, 6 days in a very tight range. The past 3 days, small bars, dojis. Most likely today will be another small bar day, another small trading range day. But there's an increased chance of a rally. A lot of times when you have these small days, you end up getting a trend day coming out of it. So far, this does not look like it's going to be a trend day. We're almost 2 minutes into the day, and we've only had a 4-tick range. What happens if we go upside down, go below yesterday's low? It's not important at all. We're still in a 6-day type trading range, and bad for stop orders. You know, when it went above this high, it reversed down. When it went below this low, it reversed up. 60-minute chart also still looks like a bull flag. We broke out here, we pulled back here, and the bulls are trying to resume up here. Well, the bears, they know that if it reverses down, the day will try to become an outside down day. So for the bears, it's a short below 1 or a failed breakout above yesterday's high with a minimum goal for reversal down below yesterday's low. For scalpers, selling below 1, we're only 3 ticks above the 60-minute moving average and about a point above the 5-minute moving average. So the probability is not all that good. If it closes on its low, it's a reasonable short. If it closes on its low, maybe 25%, 30% chance we've seen the high of the day. If it closes on its low and then 2 trades below, still more likely that it's not the high of the day. If it closes on its low and the next bar is a big bear trend bar, then the probability starts to go up that we've seen the high. Not a lot of sense of urgency. This hesitation, which is trading range type of trading. So this does not look particularly bearish, even though it's a failed breakout of yesterday's high. It would be easier to sell, higher probability to sell, if this was far above support. But right now, the bears are being asked to sell right at support. Yesterday's close, 60-minute moving average, 5-minute moving average, in the middle of a tight range. That lowers the probability that this is the start of a bear trend day. All right, how's it going to close? Okay, 1-tick tail, good, but only a 2-tick bear body, so not very bearish, and I'm not going to sell below 1. I'm going to wait for more information. For the bulls, we broke above yesterday's high and we're pulling back. They see this as a small bull flag and they want the bull trend to continue up. Vacuum down to support, and bears want the break below yesterday's low, and they hope that this is the start of a big bear trend. For the bulls, they want this to be a pullback from the breakout above yesterday's high, and they're looking for an opening reversal up from the moving average. They want an early low of the day and the day to become a bull trend day. Buying above 2, I think, has more chance of success than selling below 1. But 2, the bulls needed to have a 2 or 3 tick bull body closing on its high. We have a buy signal on the daily chart, and if today's going to be a bull trend day, if it's going to be a day like this or like this, look at the tail. There's a tail on the bottom of the bar. Those tails are usually caused by an early sell-off that reverses up. And this is an early sell-off, and the bulls are trying to get it to reverse up to create an early low of the day. So far, good bar for the bulls. Reasonable to buy, most reasonable to sell below 1, although I did not. Reasonable to buy above 2. If it looks like this and closes on its high, it would be a better buy than 1 was a sell. Traders who want high probability wait for a second bull bar closing on its high, but this is a reasonable buy for an opening reversal up from support. If it has a 2-tick tail on top, okay, 1-tick tail, it's very similar to bar 1, an upside down version of 1, except the context is better. We finished yesterday always in long, and now we're getting an opening reversal up from the moving average. Bulls need a good entry bar. They need a big bull trend bar closing on its high. If they get that, that would increase the chances that today will be a bull trend day. If they do not get it, let's say it's a bear bar, that increases the chances that today will be very similar to yesterday and be a trading range day. Always in long, right? More bullish than bearish. Decent buy signal bar. Bulls trying to create a strong entry bar, bar 3. The bigger bar 3 is, the more it closes on its high, the more likely this will be the low of the day. The bears would like a second failed breakout above yesterday's high. So they would like 4 to trade below 3, and for the market to go upside down, trade below yesterday's low. So far, it looks like a continuation of yesterday. Slightly more bullish than bearish. Okay. Weak entry bar, but for the bears, a failed breakout yesterday's high, second entry short, but a weak looking sell signal bar. While 1 still could be the high of the day, not a lot of traders are going to sell below 3. And a lot of the bulls who bought above 2 are disappointed by 3, so they'll be fairly quick to get out. Most traders, better to wait for consecutive trend bars up or down. Bar 3 is the close of the 15-minute bar, and it closed here, not at the high. So you can see on the 15-minute chart, the bulls have, I guess it's a small expanding triangle, but a tight trading range and not a very good buy signal bar. 15-minute day session, breaking out above a tight trading range, but a doji bar, not a strong, convincing breakout. Bears, a second entry sell, failed to break out yesterday's high. They want to go outside down, but a weak sell signal bar. We're still on the buy above 1, and we're still holding above yesterday's trading range that began over here. Market is deciding on direction. I think it's slightly more bullish than bearish, but not much. Okay to be swinging a short, okay to be swinging a long, better to be waiting for more clarity. For the bulls, it's a pullback from the breakout above 2, but not a very good looking buy signal bar. So this increases the chances that today again is going to have a lot of trading range trading. Everybody wants this to be the start of a trend, and they don't care up or down. However, the probabilities are not good for stop entry traders until we see sustained momentum one way or the other. Bulls trying to get second entry buy. The bears have a second entry sell. We're above both moving averages, and we're above yesterday's high. And we've rallied for about 10 bars, so slightly more bullish than bearish, but the bulls need to start to get consecutive bull trend bars. If 6 closes on its high, second entry buy. If 6 closes on its low, especially if it has a 2 or 3 tick bear body, I think traders will start selling, looking for outside down. Right now, it's more likely this is an early low of the day than an early high of the day. Looking for information. Will it close on its high? Will it close on its low? Or will it continue what we've been doing? More continuation. Not a good looking buy, not a good looking sell. Math here is bad for doing anything, so better to wait. Slightly more bullish than bearish. This is yesterday's high, and here's the high from 2 days ago. To me, it looks like a bull trend with a deep pullback, and the bulls are trying to get trend resumption up to this high. We have a ledge up there, 4 bars, same price, not tested. Usually it gets tested within a few days. Still trying to work higher, but not a strong buy. Above 6, 3 consecutive bear bars at the top of an early tight trading range. Bears trying to get a double top with 3 and a break below the neckline and a reversal down below yesterday's low. And the bulls want this to accelerate upward and continue up to the high back here on Thursday. Consecutive bull bars, so slightly more bullish. Bulls trying to get a breakout above the high of the day. 60-minute chart, bulls would like to get a big bull bar to start reversing the sell-off from last week. We would like this to be as big a bull bar as possible. The bears want to get a double top with this high. Bears still trying to get a reversal down to below yesterday's low, outside down. But if the bulls start to get, 3, 4 consecutive bull bars, even if they're small, then we'll probably have a trend day. Always in long. Minimum stop for the bulls, maybe below 4, maybe below 2. But if we get a bear bar closing on its low, bar 9, a lot of the bulls will get out below that, and bears will sell, looking for a second failed breakout yesterday's high. So important bars, the next few bars. Will the bulls get 3, 4 bull bars, or will the bears get a good sell signal bar? The close is important. At a minimum, the bulls want no bear body, and they would prefer a bull body. And the bears want 9 to close on its low. If it looks like this, 1 tick bear body, 1 tick tail, most bears will not sell, and most bulls will not get out. Good for the bulls. Even though the bull bars are not big, it's 3 consecutive bull bars. So that increases the chances that we've begun to swing up. But they need to get bigger bull bars. 60-minute bar closes in about 15 minutes. And so far it has a bull body. But 15 minutes is a lot of time when the range is small like this. The open of the day is the open of the 60-minute bar, yesterday's high. And the bears want to get back below the open by the time bar 12 closes. And the bulls want to get more and more consecutive bull bars. While it's possible that going below 9 would be the high of the day, more likely there are buyers below. We're in a bull trend, not strong, and we have 3 consecutive bull bars. So that is a low probability sell below 9. Every close matters. Close on the low, bears will sell. Bulls will get out, probably. And a bull bar, I think the bears will give up pretty soon, and that would increase the chances that we would get a breakout, a big bull bar, and then start working up toward this high. What kind of a bear bar will the bears need on 11 to sell below? I think they would need a pretty good bear bar, like closing down at the 10 low. If it's a 1 tick bear body, I think a lot of the bears will not sell. Mark is deciding, is this the high of the day? Are we going to reverse down, or is this the low of the day? And are we going to continue up to this high on the 60-minute chart? If it's going to be a bull trend day, the bulls need to start to get bigger bars, at least 1 or 2 bigger bars. If they do not get bigger bars, then this could end up being a bull leg and a trading range day. the gap so far. Will the bulls keep it open? Gap right now, 12 low and 9 high. Bulls are hoping that it's the start of a swing up. Bears want to close the gap. Not only do they want to close it, but they want to get 2 ticks below the 9 high. That will reduce the chances that the bull trend will continue. This is the final 5-minute bar in the first hour. The bulls want to get a bull body. They want to get a big bull body. They want the bull body to close above things like this high from a couple days ago, Friday. If the gap stays open, then possible measured move from this low to the gap or from the low of the day. Takes us up here. But I think the real target is here, this ledge in the top of the bull trend. Bears want to close the gap by 2 ticks. They want to get 2 ticks below the 9 high. That would increase the chances that this is a bull leg and a trailing range day. Final minute of the hour, and so far it's an okay bull bar. Bears trying to get the close above, Bears want to close below Friday's high. Nine-bar bull microchannel, so low probability sell. Probably buyers below 12, but the bears would be happy if they simply stop the bull trend and turn it into a trading range. 60-minute bar closed just above this lower high. Still not yet strongly bullish, but still always in long. The bulls need to get bigger bull bars. Yesterday was a small day. The bears wanted to go outside down, so they wanted to go this far down, and the result is a small day like that often leads to outside down or a move in the opposite direction, the same number of points. In other words, a measured move up based upon the height of the range. So that's another magnet. Measured move up based on yesterday's range, and then a measured move up based upon the gap that we have today and today's low. Both are right there. Any reversal can be the high of the day, but this is now a 9-bar bull microchannel with no bear bars and 6 bars. So low probability sell, or a few points higher, a couple points higher. We have all day to get there. We might get there early on, but we have all day to get there. By the close, bulls from bar 8, consecutive bull bars, have not made 1 point yet. It has to go up 5 ticks above that close for them to make 1 point. Even though it's a decent sell signal bar, it's a 9-bar bull microchannel. A lot of bears will wait to see if we get 3 consecutive bear bars before selling. I bought the 8 close, and I've been trying to take part off at 1 point, and I get filled. And that increases the chances that we're going higher. If I get filled on the high tick, usually then it's probably going higher. Originally was holding for 2 points for the first profit taking, but when the rally could not get consecutive big bull bars and we started to get bear bars, I decided that it's probably not going to be that big of a trend. Starting to get a wedge look, 1, 2, 3. So a lot of the bulls will get out below 16 if it has a bear bar. Still always in long, still odds favor a move up to those targets, but this is not behaving the way bull trend traders want it to behave. It might be 2 legs up, 1 pullback, 2, or 1 and then double bottom pullback and then 2. We're bearish shorting. I think the channel is too tight to be selling with stops. The probability is too low. We have about a 15 bar bull micro channel. Even though we can argue parabolic wedge, 1, 2, 3, most traders are not going to sell below 19, no matter what it looks like. We're 8 ticks above the 8 close, so some bulls are trying to take 2 points off and has to go 1 tick higher. I still think we're going a little bit higher, at least to the measured move, and maybe a 30% chance, 20% chance it'll be a big bull trend day and we'll get all the way up here. Parabolic wedge, but a 15 bar bull micro channel. So low probability short, possible high of the day, but more likely a minor reversal. Actually, it's not a 15 bar bull micro channel. We had a pullback here, but it's a very tight bull channel. Parabolic wedge, but the channel is too tight, probably minor reversal. Targets above. We have a lot of time left in the day. It might take hours to get up there. If you did buy, let's say the 8 close, right, I would be taking at least partial profits here. Minor reversal, that means either a bull flag or a trading range. This could be a trend resumption, trend reversal day where the market rallies and then goes sideways like this for hours and then decides whether to resume up to the targets or reverse down. Right now, always in long, not strongly bullish. Parabolic wedge, so might get a couple legs sideways to down. And for the bears, they need to get a lot more. They need to get 3 big bear bars, not likely. They need to get sideways and then a double top or some other kind of a reversal, maybe a third push up, 1, 2, and then 3 for a wedge. Right now, I think the math is not good for shorting. However, traders might start to sell above bars. For example, above 18 or 1 point above 18 at the measured move targets. 5 bars without a bull body. Anyone buying here needs to stop below 4. And I think it's, while it's okay to buy, it's probably better to wait for a couple legs sideways to down. And for the bears, not enough selling pressure, I think, to be selling at the market or below 19. So I would wait to sell. What happens if we get a big bear bar? Well, then traders will start to sell closes or sell the market. We do not have that yet. Even though it's not a great looking wedge, it's still a wedge. And that makes 2 legs sideways to down, likely. Still always in long, but we might start to enter, we might be starting to do this. And then later in the day, the market decides whether to resume up or reverse down. So not a lot of excitement here. If a trader's flat, I think it's probably worth waiting a few bars to see what we get. Maybe a double bottom with 14. The bears want to close the gap 14 low. This is a lot of times you'll get a double bottom at a breakout test point. Breakout test, and a lot of times you'll get a perfect double bottom for the breakout test and then get a resumption up. I'm less confident in the bulls because the rally lacks big bull bars. We have consecutive bull bars here, but not particularly big. You know, a 2-tick tall bull body usually does not result in a big bull trend. Limit order bulls can buy right here, 1 tick above the 14 low. I went back to flat. I'm flat right now. I'm looking to buy. To sell, I would need a double top, maybe sell above this high, maybe sell at those measured move targets a point higher, or an endless pullback, 15, 20 bars, just pulling back relentlessly. Usually, if you have an endless pullback like this, I don't like to sell until we've had a pair of bear bars, but this occurred at the very end of the day, so not likely to go down much further. But endless pullback is a bull flag, still a bull flag, still a bull flag. The bears tried to get a breakout, but bad follow through, so not a very good sell. The bears finally get a breakout and follow through, but at the end of the day. So if you're a day trader, it's too late to be selling. There was some follow through the next day. This is what I mean by an endless pullback. It's a bull flag that just keeps adding bars to it, and at some point, there's a 50-50 chance that instead of a bull breakout, you get a bear breakout, which is what the bears got here. Parabolic wedges that occur on the open often lead to reversal, and here this would be the high of the day. I still think it's more likely we'll enter a tight trading range than it is we're going to reverse. There's also not much energy. If you're going to see a parabolic wedge top, it's more likely to occur if the market went too far too fast up. And this did not go particularly far, and it did not go particularly fast. We could still get an outside down day. Sometimes you can go several points above yesterday's high and still get an outside down day. I'm going to open up my examples folder. Yesterday's range is so small that it would not take much to go outside down. Small range day, market broke above it, reversed below it, and then ended back in the middle. Sometimes, this is broke slightly above yesterday's high, reversed down, does not look like today, does not look like today, maybe like today, parabolic wedge rally, endless pullback. Then at some point you get a bear breakout bar and a follow through bar, consecutive bear bars. And that can make the market always in short. And here we traded down below yesterday's low, so above yesterday's high and then below yesterday's low, outside down. This parabolic wedge had more relentlessness to it, so there was more of an overbought, overextended market, higher probability of actually getting a reversal down. fairly tight bear channel, and that makes a lot of bulls not willing to buy above 26, and it's too low to sell. The reversal down has not yet made it always in short, therefore it's still always in long, and if it's always in long, traders don't want to sell this far below the high. So it looks like we're probably going to go sideways here. Big up, big down, big confusion. A lot of the bulls will wait for a second entry buy, a micro double bottom. Will the bears sell the 26 high, or is that still too low? Some will sell, taking a chance that we've begun an endless pullback, but I still think sideways is more likely than down or up. So not a very high probability sell, and for the bulls, I think they need a micro double bottom. At what point does it become always in short? Well, I think the bears need to get bigger bars. One more, well, even right now, any reversal up will be minor. This is enough selling so that the bulls will get on the first reversal up is a lower high. So it's becoming always in short. If this bar closes on or near its low, then it probably is always in short. Is it strong enough down to sell the market? Well, I think a lot of bears would rather sell a rally. We're right above the 60-minute moving average. Yeah, so we're always in short right now. Traders are selling the market. Can you buy on a stop above 27 for a failed bear breakout, low of the day? I don't know, we're at support, but I think bulls would rather buy at least a micro double bottom. It looks like a lot of the bears scalped. We're back to possibly getting an outside down day. Always in short, exceptional bar. Whenever you get an exceptionally big bar, the odds are you're going to get some follow through selling. The bulls are hoping it's simply a failed breakout low of the day, and then we get a double bottom with the low of the day, and that we resume up. But this is a big enough bar so that there probably are sellers on the close somewhere in the middle of the bar, and probably right now I think there's better than a 50-50 chance we're going below yesterday's low instead of up to the measured move targets. Here's a 50% pullback of the sell-off. And here's a 50% pullback of the sell climax, the breakout. So somewhere in here, probably sellers. Whenever you get a breakout, especially when there's a lot of trading range price action, you always got to be thinking, is it a bear reversal or a pullback from this rally? And the bulls are hoping that this is simply a pullback in this bull trend, and the bears are hoping that 27 is big enough to make it likely to be the start of a trend down, that it's a give up bar. And right now it's big enough to make me think it's more likely we're going down than it is that this is simply a pullback. Well, the bulls, they want a bull trend, and they hope the sell-off is simply a sharp pullback like this. Failed bear breakout and then higher prices. But this bar is big enough, I think, to make it more likely that we're going down. Bear reversal, but it became a bull flag. Bear breakout became a higher low, but this bar is not as big as today's bar. Today's bar is more like this. Here we have two big bars. That is even better for the bears. Bears would like a second bar, bear bar. They'd like it to have a big bear body, but not likely. And the bulls want a bull bar for a failed breakout and a higher low. However, not many bulls are going to buy above 30, I guess 28, unless it's a pretty big bull bar. So more likely sellers above, and we'll go down at least a little further. I don't know if my mic was on. To get to the 50% pullback, the bulls would get above the breakout point, and that is not good for the bears. Always in short, right? Bulls right now hoping for at least a trading range. They doubt, I think most traders doubt it's going to be a bull trend day. So that means we're left with a trading range day or a bear trend day. And the bulls are trying to avoid the bear trend day. They're hoping to keep it in a trading range day. Probably sellers 28 high and higher, or simply start selling about 1 point higher, around the 50% pullback. Bulls need either a strong reversal or a series of bull bars like this. More likely there'll be sellers somewhere up in here. You might enter a tight trading range here, a 50% pullback, 60-minute moving average, but I still think we're always in short. Some bulls will buy the 29 low and the 27 low. I would not. I would wait to buy. Bears want to quickly get down below yesterday's low for an outside down day, and bulls looking for a bounce here. Always in short, but not yet strongly bearish. At this point, I think better than 50-50 chance we're going to have an outside down day. Limit order bulls buying 27 low and 1 point lower. Need one more tick to make a profit. Some bulls instead bought 1 point lower. Can they hold for a higher low? I still think we're always in short. I thought this was strong enough to get a second leg down. It's possible that this is the second leg down and that we're going to reverse up, but tight enough bear channel, so the reversal is probably minor, even though it's a second reversal up. So probably the best the bulls can get is a trading range. I still think it's more likely that we're going to get outside down. Sometimes you get a breakout above yesterday's high, strong reversal down, and it does not get below yesterday's low, and it rallies from there. Like this. Above yesterday's high, collapses down, 2 legs down, 1 pullback, 2, does not get below yesterday's low, and then starts to reverse up. If you get a couple bull bars like this, then we're probably going higher. just illustrating that we reversed up, second leg down from above yesterday's low, and the result was a trading range day. Here, we just collapsed down, but reversed up strongly just above yesterday's low, and we got a reversal into a trading range day, down, up, closing near the open. Another example, two legs down from above yesterday's high, could not get below yesterday's low, and we got the reversal. This is what the bulls want. They want the reversal up. Reversal up. Reversal up. Right now, still slightly more likely that we're going to go below yesterday's low. That's a pretty good bar for the bulls. Globex chart, I talked on the open about an expanding triangle, 1, 2, 3. And now we had an expanding triangle top, and now we have another expanding triangle bottom. Now it's a 7-legged triangle. That sometimes happens. The triangle keeps adding legs, but at some point it stops being a triangle and moves on to doing something else. Bulls are hoping this is an expanding triangle bottom, but 4 bear bars, one of them pretty big, not a high probability buy. A lot of the bulls who bought scalped out. Stop order bulls buy here, and they're buying, hoping that it's the start of this. Higher probability to wait to see if we get a couple good bull bars and then buy. Higher probability, wait for a couple pretty good bull bars and then buy. Right now, 90% chance we're not going back above the high of the day today. So that means either a trading range day or a bear trend day. Not likely to be a big bear trend day. This is, even if we get below yesterday's low, most outside days do not become big trend days. Outside down and buyers at yesterday's low. Outside down at the end of the day, but did not get much below yesterday's low. Outside down and got a minor reversal. Outside down, reverse back up. Outside down, end of the day, but not far below yesterday's low. Reversed up. Reversed up, broke out again, reversed up again. Sometimes you get this. Above yesterday's high, below yesterday's low, outside down. And the reversal up is so big, it takes you back above yesterday's high. So outside down and then outside up. Outside down, reversal, back above yesterday's high, outside up. Daily chart. Actually, this is the weekly chart. Look at the weekly chart. We traded outside down and then outside up. You can see on the daily chart, this is the prior week's range. We went above it, below it, and then back above it. And that's what took place here on the weekly chart. Well, the bear is a pullback and a bear trend, but second leg down, just above yesterday's low. Not a great looking short. To me, the picture looks confusing, so it makes me think we're probably going to go sideways here a little bit. Still always in short, but pretty big reversal, 32, and second leg down. So not as bearish as it could be, and probably buyers not far below yesterday's low. because that's what usually happens outside down. Sometimes the market will go as far below as it went above. Here we went 1, 2, about 3 points above, and therefore, maybe we'll go 3 points below yesterday's low down here. I don't think we will. To me, this still looks like we're getting higher lows and higher highs. However, if we do reverse up here, I think the best the bulls get will be a rally back up to above this sell climax. I sold and scalped. I'm back to flat. And I also bought the breakout below 27 and back to flat. I'd like to buy here, but 32, not quite big enough to convince me that the bulls have taken control again. And 33, I often buy below the bear flag, 33, but with a bear body, I decided not to buy the 33 low. Bulls want some kind of a reversal. Let's say 35 is an inside bar. Then 3 pushes down, 1, 2, 3. Even though it's a double bottom, 34, 31, it's still a type of a wedge. It's 3 pushes down, in which the bulls were so eager to buy. The third push down, 34, could not fall below the second push down, 31. So the bulls have a swing buy above 35, but a tight bear channel, still probably a minor reversal, which means the best the bulls probably will get, at least initially, will be a trading range, a leg on a trading range, maybe testing the 60-minute moving average, the 29 high, these lows over here at the top of this tight range. Not a great stop order market, selling below 33, buying above 31, buying above 35, probably going to go sideways here. Can you buy at yesterday's low, betting that we'll get a reversal? I would rather wait to see the reversal and then buy. Most outside down days do not become big trend days. Normally there are buyers around the prior day's low. Let me put this down here. These bottom ones are outside down at the very end of the day. Nothing really to trade the days. Well, here we got enough time for a little bit of a reversal. Reversing up. Reversing up. The bulls wedge. Well, will they buy above 36? Bulls who are willing to take a low probability trade will. They'll buy above 36 and then stop below 36 or below yesterday's low, taking a chance that we're going to get a reversal up from just above yesterday's low. Higher probability to wait until you see the reversal and then buy. Reversing up just above yesterday's low. Could not get below yesterday's low, reversed up. Buying right here, 34 low, is a low probability trade which always means great risk reward. Bulls buying the 34 low know they'll probably lose money, but they also know that if they put a stop one tick below 74, yesterday's low, they're risking 1 point, hoping to make 5 or 6 points. And that is probably enough to offset the low risk. But I usually do not take those low risk trades because I like to win, and low risk trades mean you usually lose. I'd rather wait until the probability gets higher. Bulls trying to get a wedge, 1, 2, 3, but they want to get a decent bull bar. Is a 1 tick bull body enough? It might be, but a lot of bulls will wait for either a stronger buy setup, maybe we'll go sideways and get more bull bars, or for a strong reversal up and then buy. I think the bears will get out above 37 if it has a bull body because of a possible wedge and a possible deep pullback from a bull trend. Sometimes when you have a bull trend, you get a very deep pullback, yet it forms a higher low and the bull trend resumes. Because we're hesitating on the way down, I think that even if we get below yesterday's low, we're not going to get far below yesterday's low, that we'll get a reversal. I doubt we're going to get all the way up here, but we might. However, I think we'll either reverse here or from a little bit lower, like from below yesterday's low. Some kind of a bounce from below yesterday's low. Bears are still short unless it goes 3 or 4 ticks above any bar or 1 tick above a bull bar. So I think the bears get out 1 tick above 37, even though it's still always in short. And then they sell again if it starts to resume down. They'll sell again If it goes above 37, they get out. And then if you get a bear bar, they'll sell again below the bear bar, or after a couple small legs sideways to up, and then look to sell again. This is not looking like it'll be a big bear trend. This looks like it's going to evolve into a trading range. Spike, pullback, channel, 3 pushes, 1, 2, 3. And the market simply deciding, is this the bottom of the trading range, or do we go below yesterday's low and then reverse up? Confusion, right? So it usually means a trading range. The bulls have a wedge bottom, but not a very good looking buy. The bears have a magnet below, but the bulls keep getting reversals. I think it's still always in short. I think the bulls need a strong reversal up to make traders believe today's going to form a higher low and not outside down. If we do go outside down, this hesitation increases the chances that we will get a reversal up from below yesterday's low. So the bears, another breakout pullback short. You can call it a double top 32, but right above support, yesterday's low. Still always in short. As I said, the bears who get out above the bull bar 37 have to sell again below a bear bar 40, or they're going to wait for a second entry short, maybe a micro double top, and then sell again if they're trading always in short. But probably buyers around where we are, or not far below yesterday's low. On the successful reversals, here we got a micro double bottom, a good buy signal bar, and a good entry bar, a good follow through bar, and the bulls got a second leg up. Micro double bottom, micro triple bottom, not a good buy signal bar, but pretty good reversal bar. Here we got a climactic reversal with a good buy signal bar, good bull bar follow through. Not a good buy signal bar here, but a good entry bar, and went higher. So we do not today yet have a comparable reversal attempt by the bulls. So it's still probably early to buy. Whenever you have a wedge bottom, in general, you break below it, 50% chance of a couple legs down, 50% chance you break below it and we reverse up. Bulls, small double bottom, 37, double bottom of the wedge bottom, but most bulls will not buy unless they get a pretty good bull bar, 42. This is not behaving the way days do when they reverse up from above yesterday's low. This looks like it's going to go below yesterday's low. If it's going to reverse up from above yesterday's low, you normally get a pretty abrupt reversal. We're not getting that, so it makes me think we're going lower. But I also think we will reverse somewhere below yesterday's low. Will most of the bears scalp for 1 point, or will they hold for a swing? I would not hold for a swing, but I think it's okay to try to scalp for 2 points. I would take some off at 1 point if you shorted. 3 bear bars closing near their lows or on their lows. Bulls will want more than a 1-tick bull body, 43. They'll want a 2 or 3-tick bull body to buy on a stop above 43. Micro double bottom before we get the reversal up. Micro double bottom. Here, just a huge reversal. Micro double bottom, really good looking bull bar. That gives you a better chance of a good rally. decent bull bar. Still needed a double bottom before the market could go up. One tick bull body, 43. I think most bulls will wait. But if it's a bull bar, especially closing on its high, even if it's only a one or two tick bull bar, I think most bears will exit and do the same thing that they did here. Get out above the bull bar. If there's a strong bear bar, sell again. Everybody knows that most outside down days do not become big bear trend days. So everyone knows the odds are against this continuing down a lot further. For the bears, they have a 5-tick trap, and it creates a dilemma for them. They know that most outside down days get some kind of a reversal, and now the 40 low bears have a 5-tick trap, and it's back to their entry price. A lot of the bears will buy back their shorts. Bulls do not yet have a very good looking buy setup. Can they simply buy at the market and use a wide stop like 3 or 4 points? They probably would be okay. At the bottom of a 2-day trading range, the market reversed up, trying to reverse up again, a higher low. Still always in short, but I think a lot of the bears, most bears will get out above a bull bar, 44, or 3 or 4 ticks above a bear bar, 43. Aggressive bulls will buy above 44 if it closes on its high. Others will wait to see the reversal up and then buy. When you get these situations where you have a bad buy signal bar, 43, yet the market appears to want to go higher, in the absence of a good buy signal bar, a lot of times I'll put up a 1-minute chart. And if I start to see 3 or 4 bars closing on their highs and having bull bodies, sometimes I'll buy at the market. We have one here, but that's it. So to me, on the 1-minute chart, it does not look bullish. If we had 3 or 4 bull bars closing on their highs, that would increase the chance that we're going to get a reversal. And at the high, if you got 3 or 4 bear bars closing on their lows like this, it increases the chances that you're going to go at least a little lower. On the open, you started to get bull bars, 1-minute bull bars closing on their highs, increasing the chances that we're going to go higher. Not a very good buy signal bar, 44, but a wedge, you can call it a wedge with 4 pushes, 1, 2, 3, 4, or 3 pushes, 1, 2, 3. A failed breakout below yesterday's low, but a bad buy signal bar, 43, bad buy signal bar, 44. So not a very reliable buy setup yet. The bulls need to get big bull bars. They need to get bars like that, like this, like that, like this. I'm just enlarging that chart to make it easier to see. I'm trying to clean up all of these example slides to make them easier to see. So I'll go through all of them eventually and try to make the text more clear. I started to do it on the early slides. Just put simple text that discusses what's on the slide, and not a bunch of text about other things. I'm just trying to make the slide have text that only talks about the slide, about the pattern that I'm trying to show. You can see bad buy setup, no buyers, and the bears knew it was a bad buy setup, and they sold. I did not do anything. We're still always in short, but I still think the odds are we're not going to go much lower, and that we're going to get some kind of a reversal. Another low one short, like 29, 33, and 40. But 40 was a 5-tick trap. A lot of bears will not sell below 45 because the last stop entry sell was a loser. So that increases the chances that we'll start to go sideways here. Next target is this low. I don't know if we'll get there. I still think the downside is limited. Limit order bears made money selling 43 and 44 high, with stop order bears 5-tick trap below 40, 5-tick trap below 45. Stop order bears are having a hard time making money. We're starting to stair step down. Bulls will start to buy reversals, especially if they can get a decent buy signal bar. If they don't get a good buy signal bar, a lot of bulls will wait until they see a strong reversal up and then buy. 4 legs down, but a bare body. So not the same as what we had over here. We had a doji sideways, and then we got a couple bull bars. This was a higher probability buy here. 4 legs down, 1, 2, 3, 4. Basically a bottom attempt, a bear breakout, second leg down, and then another bottom, consecutive bottoms. Similar to here, tried to bottom here, broke to the downside, and got a second leg down. But tight channel and 3 bear bars. So most bulls will not buy above 47. They'll wait for it to go sideways a little bit and start to get some bull bars. Like last week, bulls want to see bars closing on their highs. Another low one after 2 5-tick failures. So a lot of the bears will not sell below 48. Bulls, they're willing to buy, but probably not below 48. Limit order bulls buying 31 low, 37 low, 43 low, all lost money. So a lot of bulls are waiting until they see other bulls make money before they buy. A lot of bears willing to sell a 3rd consecutive low one after the first 2 failed. So it might be buyers below 48, but 4 bear bars, limit order bulls have not made money. So a lot of bulls are waiting. High 4, reasonable buy, but higher probability to wait to see if we start to get some bull bars. Unlikely to go straight up, more likely we'll do something like this maybe for an hour. But as I said, I think some kind of a reversal is likely. Outside down days usually do not become big bear days. The bears have had 3 consecutive low ones that were losers. Yet limit order bulls have not been able to make money buying below any of the lows. And so far they have not made money buying the 48 low. They need one more tick. I think that we're probably beginning to go sideways to up. To sell again, I would need maybe the market to go sideways for several bars and form a low 2. For the bears, this one's a low 2, low 1, low 2. Well, we've had a series of low ones that were not profitable. So I think it's probably better for bulls to begin to look to buy, and bears probably should wait to sell. Spike pull-like channel with now 4 or 5 reversals in the channel, probably transitioning into a trading range soon. Not a very good sell, probably buyers below, but it's a low 2 and a bear trend, and the limit order bulls have not yet made money. Stop order bears not making money, limit order bulls not making money. Probably soon will begin to go sideways, and then the bulls will try to get a reversal. Stop order bears are not making money, and therefore a lot of the bears who see 53 as a reasonable sell will not take the sell. Stop order bears lost money below 40, below 44, below 48, below 51. Are they going to now sell below 53, thinking that they'll finally start to win after 4 times losing? I don't think so. It increases the chances that there are buyers below 53. However, bear bar closing on its low below the moving average in a fairly tight bear channel, not a great buy. Some bulls will buy 1 tick above the 53 low, put a stop 1 tick below. So they risk 2 ticks, betting that the bears will not sell, the short below 53 will not trigger, and we will reverse up. So it's one of those low risk, low probability trades, but the math makes sense. What about the 20 gap bar bears? Will they sell here? I would not. I think we're trying to bottom. We've had 5 pushes down in the channel. We're at obvious support. I think the bulls need one more bar to become always in long. So right now it's still slightly more likely that we're going to go down for one more new low or many more new lows. But if the bulls get one more bull bar, consecutive bull bars, then we're probably always in long, and maybe we'll get all the way back to the open of the day, which is yesterday's high. We talked about that earlier. How sometimes you get an outside down day that becomes an outside up day again. Above yesterday's high, below yesterday's low, back to yesterday's high. Outside down, and then back above yesterday's high, outside up. For the bears, you can call it a wedge. We went up on 47, up on 50, up on 54. It's a 20 gap bar sell. Some bears sell closes of good bull bars at the moving average in a bear trend. So some bears sold 1 tick. They get filled 1 tick below the close of 54. I am flat looking to buy. Even though it's still always in short. We're repeatedly trying to reverse every new low, but the bulls so far have not yet made money. Limit order bulls from 51 low, 4 tick trap. I had to go up 5 ticks. Another stop entry sell. but every stop entry sell for the past 4 of them have been losers. So even though it's a stop entry sell, a lot of bears will not take it. Just like they bought the low of 53, bulls will buy the low of 56, trying to prevent the sell from triggering and hoping that we are in the early stages of a swing up. A lot of bear bars, and that makes a big swing up unlikely. But bears are not making money on their stop entry sells, and therefore we're probably not going down very far either. So if you're not going down far, not going up far, you're probably going to start to go sideways. Bears trying to get a break below a bottom. We're getting too many bear bars closing on the lows, so I'm not buying these lows, but I'm also not selling because stop entry bears have been losing money for the past 4 or 5 sell setups. So I'm trapped out, looking to buy a reversal up. Bulls trying to create a bottom. They have a double bottom, 50, 57, but they do not yet have a good buy signal bar. If 58 is a inside bar closing at the 57 high and on its high, that would be the first stop entry buy that I think traders could consider since early in the day. If it's not perfect, I would wait. Not a good buy signal bar. However, the location is really good for the bulls. Location and the context. 15-minute bar, trying to get a double bottom, slightly lower double bottom, with the bar closing on its high. 1 minute chart. No, we don't have a lot of bars closing on their highs, but the context is good, and the inability of the bears to make money is good. If the bears cannot make money, it's usually better to look to trade in the other direction. So can you buy at the market? Yes. Probably need to stop a couple points below the low, and better if you can scale in lower. Otherwise, you wait to see if we get a couple consecutive bull bars closing up near their highs. That would be enough to flip it to always in long, like 7, 8 earlier. Another stop entry short for the bears. The bulls on the 15-minute chart have another buy signal bar, but it's not especially strong. However, it's a second entry buy. We're still always in short. The bulls need consecutive decent bull bars, and they do not yet have it. However, the bears are not making money selling with stops. They're making money selling with limit orders near the moving average. Sell a tick or two below the moving average, sell above a prior high. But this looks like we're transitioning. We had a spike, we transitioned into a channel, and now we're transitioning into a trading range. Not a good sell, not a good buy, but bulls probably are buying. They finally made money buying the 47 low. We rallied 5 ticks, and that allowed them to make money. They probably will buy the 59 low. They might buy the 61 low, even though it's a bear bar at the moving average. set a stop entry buy. Well, nothing is good for the bulls or for the bears right now, but the limit order bulls, I think, are buying below bars. Limit order bulls are buying below bars. They'll certainly try to buy below 59. They probably did buy below 61. And bears are selling with limit orders, not stops. They're selling a tick or so below the moving average and at prior highs. Since we're trying to bottom, or at least stop the selling and go sideways, can traders start to buy below bars? They probably will. The bears know that, and the bears therefore will try to get a big breakout below 62 to trap all the limit order bulls. But even if the bears do get the big breakout, we'll probably then get a couple legs down and another attempt to reverse. If you remember earlier, I said that outside days often have symmetry. If they go above the prior day's high for about 3 points, they'll often go below the prior day's low by about 3 points before reversing. And therefore, we may go down another couple points before the bulls are able to create a successful reversal. Bear is trying to get a breakout and a couple more legs down. I would not sell down here. Bulls probably are buying the 62 low, especially if they can use a wide stop, like a 4-point stop. Otherwise, bulls will keep waiting until we get either a good-looking buy signal bar or a couple strong bull bars closing above the moving average. Bulls trying again to get a good buy signal bar. If they get a 2 or 3 tick bull body closing on its high, now bears would get out, and bulls, I think bulls would probably start buying. A lot of bulls don't like to buy in tight channels, tight bear channels. They prefer to wait until there's a strong breakout above the channel and then look to buy, because channels can go on a long, long time, and they can last all day. 60-minute chart testing this low. Still a tight trading range for 3 days here, and a bigger tight trading range for 7 days. Until there's a strong breakout to the downside or to the upside, the odds are the trading range will continue. That means that we'll probably reverse up from where we are. "30 seconds to go for the 15-minute bar." The bulls want a bull body on it, which means it would have to close above the high of 64. It means that bar 66 would have to close above 64. That's probably not likely. And for stop order 5-minute traders, this does not look like a really good stop order buy. Tight channel, better if you're buying to be buying with limit orders below bars than stops above bars. Will the bears keep selling at the moving average? Well, some might. They'll keep selling until they're wrong. But this is getting pretty late in the channel, and the channel has not fallen much over the past 20 bars. So to me, it's not a very good short at this point. And for the bulls, it's a limit order buy, but even then, it's not all that good. Very difficult to structure profitable trades in here. Limit order bulls again made money, buying 62 low, had to rally 5 ticks. Therefore, limit order bulls might start buying below bear flag 67 instead of waiting for a new low 65. And for the bears, I would not sell with stops down here. Too many stop order trades have resulted in 5-tick traps. I tried to buy the 67 low and did not get filled. I think that increases the chances that we may start to test prior lower highs in the channel. I pulled my order, took too many bars, plus it's getting late in the day, so I did not end up buying 67 low. I would not sell here either. If the bulls get a second buy signal bar closing on its high, that would be a stop entry buy. still not a good stop entry buy and too low to sell. It's still always in short and never became always in long again after the 27 give up bar breakout. Too late in the day for bulls to be buying with limit orders because you can run out of time before you make any money. And for the bears, I would not be selling at the bottom of a bear channel, especially when it's starting to flatten out a little bit. Very steep down, fairly steep down, less steep down. Weekly chart becoming important. Here's the low of last week. Last week had a bear body after a buy climax bar, and therefore it's a sell signal bar. And it looks like we might get below it tomorrow. Here's the weekly chart, and that would trigger a sell. But the channel up is so tight, not a lot of bears will sell. Bulls might sell out of longs, but a lot of bears will wait for either a huge bear bar, not likely, or 3 or 4 small bear bars, and then they'll start to sell. Bulls hoping for some end of the day profit taking and for a bounce up to one or any of these lower highs. Probably not going to get back to the open of the day, so the best the bulls can probably get is some kind of a bounce up here. If they're lucky, maybe all the way up to the 60-minute moving average, but the day has so little momentum that more likely will go mostly sideways. That's assuming the bulls can stop the bear channel. We just keep going down and down and down. There's always a chance that we could collapse into the close on the low, and then tomorrow gap down. Remember, we have a gap up here, and anytime we get a gap down, even after this gap closes, it's still an island top for me. So gap up, gap down, it still becomes an island top, which is a topping pattern, but most island tops do not lead to trend reversals. They usually lead to trading ranges. Same with island bottoms. Good looking bull bar, right? So the bulls, it's not terrible to take this buy. The one problem is there are 2 problems. One is you're buying in a tight bear channel, which is not all that good. So the probability is not all that good. And the buy signal bar is only 2 ticks tall, so your risk is small. And whenever you take a low risk trade, the probability is low. If you want higher probability, you have to wait for a strong reversal up. Can you sell here? No, you're at the bottom of a channel and you're selling above a bull bar. So you're either buying, for example, buying back shorts, or you're taking a chance, low probability bet, buying, hoping for profit taking into the end of the day. Hoping that the bears take profits and that we go back up to one or more of these lower highs in the channel. Another obvious target is 2684. You can see a lot of bars have highs and lows and opens and closes right around there. So it's an important price. Also, it's right around yesterday's low. Remember, when you have outside down days, the market usually tries to get back above yesterday's low. Went below yesterday's low, back above it. Way below yesterday's low, still got back above it. I was just looking at time and sales, and right here at 2682 and 75, a trade just came across with 738 contracts, and then the market fell 1 tick, So that tells me that some institution sold 700 contracts here. Probably not profit taking, because there's not enough room for them to have bought and make a profit. So it's more likely the institution was selling, betting that we're going to go down further. I'm looking at time and sales. I just saw a trade come across with 2001 contracts. But time and sales is so unreliable. You don't know if that trade actually took place or if it's the final one contract in a 2000 contract trade that was filled in pieces. And they showed the volume on time and sales when the final piece got filled. There's another trade with 907 contracts. It's impossible. I think it's impossible to make money trading time and sales. The theory is if you see a huge trade like the 2000 contract trade and the next tick is lower, and it was, that increases the chances that an institution made a big bet that the market was going to go lower. However, it's impossible to know if the institution is a high frequency trading firm just looking for one or two ticks lower, if the institution is selling out of a long, it's impossible. For me, I cannot make money from time and sales. But when I'm not planning on taking a trade like right now, I'll sometimes put it up because it's fun for me to see the huge contracts, the huge trades coming across, despite the day being very quiet. It just reinforces my view that even when the day is a pretty quiet day, the computers are still willing to trade huge volume. Too late in the day to be buying with limit orders at the 72 low, and the sell-off is not strong enough to be selling the breakout here below the 72 low. So I think traders have to just wait. Probably not going to get any more trades today. It's getting a little bit late for this to become buy the close, and we're too late in the bear trend for traders to be selling a big bear breakout. So, it's not going to become sell the close. That leaves you with reversal traders, buying below 72 or above 75. But tight channel, if you're buying above 75, you're buying high up in the channel, and the math is just not all that good. I never checked measured move down based upon the height of the initial rally. And that's right around the low of the day. When you get a reversal day, it's fairly common for the bulls to buy back around a measured move down based upon the height of that rally. Profit taking at the end of the day, bears buying back their shorts, and bulls trying to get back above the 74 low from yesterday's low. Not a good buy, stop entry buy in a tight channel, but I think the bears have to get out. If you remember on these examples, a lot of them got the reversal right at the end of the day. No, these did not reverse, but fairly late in the day, no reversal there. Fairly late in the day. Nothing, I think, to do here. We're probably going to close right around here. We went above one of the more major lower highs here, 54 high, and we're hovering right around yesterday's low, and we've been oscillating around 2684 for the past few hours. So that is a magnet. Bulls are trying to get, they'd like to get all the way back to the open of the day. I don't know that they will. They have to get above the 60-minute moving average. Pretty quiet day. We had a channel up that began yesterday and then a channel down. We went outside down. And usually when the market goes outside down, the market is going to try to get back above the breakout point, yesterday's low. I think it was pretty tricky trading through here. Stop order bears, you're in a bear trend, but stop order bears, 5-tick trap, 4 or 5-tick trap, 3 or 4 times. And that means it's difficult to make money selling with stops in a bear trend. That means there's something wrong with the bear trend. It usually means that the bear trend is not going to last all day and that we'll get some kind of a reversal, either into a trading range or into an opposite trend. Here we're trying to get a reversal into an opposite trend, but I don't think it's tradable, because 3 bars left, the profit potential is not very big and the risk is fairly big and the probability is not all that good. So you cannot sell. We're always in long. It's by the close. But if you're buying closes, we're right below the 60-minute moving average. We're trying to get back above the low of the open, the one low. Maybe all the way up to the open. But they have to get above the 60-minute moving average and these 2 lower highs. And that lowers the probability of the market being able to do that. Because yesterday was a small day, we knew the odds were that if we started to reverse down from above yesterday's high, we probably would go outside down. And we had a parabolic wedge, not all that convincing. Then some news event, bar 27, changed the character of the day. That was likely to lead to at least a measured move down based upon the height of the body and possibly a swing down. And it led to a swing down that lasted 4 hours, which is long. We went outside down, which was likely after we started to reverse down up here. And we're back above the low of yesterday, which was likely. I didn't have an opinion about whether we would close above yesterday's low. I just thought that we would get a reversal back up to above yesterday's low and then decide where to go once we were there. Stop entry trading, really a bad stop entry day. And here we are in a bear trend, and stop order bears were losing money. Here, some bears sold below 1, betting on an outside down day. Failed breakout yesterday's high, but I said the bear body was only 2 ticks, and we had a 1-tick tail. Not a great buy. And then we were first up on 2, and for the bulls, it was a breakout above yesterday's high and a pullback, and we're reversing up from support, a higher low at the moving average. That was a better buy, but the follow through was terrible. Nonetheless, we kept going up, 7, 8 consecutive bull bars closing on their highs, probably going higher. Bull bars not big, probably not going a lot higher. And then up here we have a parabolic wedge, a bull breakout above the bull channel and a reversal down. Not a great short, probably a minor reversal unless we start to get a series of bear bars or a big bear breakout. We had 5 bars without a bull body, not all that strong, and then here we had 4 more. At that point, it was likely bears would start selling closes and sell above bars, and then we got a big bear breakout, 27, exceptionally big bar, and when you get these really, really big bars, usually you're going to get some follow through, and we ended up channeling down for about 4 hours. In the channel, it was important that the bears were struggling. They made money below 33, but the stop entry sell below 40 lost money. 5-tick trap below 45, 4-tick trap below 55. So the market's telling us that the bears are weak, and therefore they'll soon stop selling. And if the bears are not selling at this price, the market has to go up to find a price where they will be willing to sell. So even though we were selling off here, I kept saying that it's not right, but that the bears cannot make money selling with stops, and we'll probably get a reversal. I prefer the reversals to come earlier in the day because it's very difficult to trade them this late in the day. By the time you've decided the reversal is underway, the stop is very far, but there are not many bars left, so the profit potential is not very big. Anyway, for stop entries in the channel, below 29, yes, below 32, yes, and below 40, yes, but it was a 5-tick trap, and that made bears not want to sell below 45 or below anything for the remainder of the day. Bears were forced selling with limit orders above bars, and a lot of bears don't like to do that. Selling above 44, selling above 53, selling above 59, selling bull closes near the moving average, 51, 54, 60, and they scalped on the way down. And bulls started making money when they bought the 47 low. It rallied 5 ticks, and that was telling us that the bulls will probably start buying every close below 59, below 65, looking for at least a 1-point scalp. I mentioned that bar 72 was a reasonable stop entry buy, but the bar was small. And whenever you have a small bar, you're probably going to lose money. It's probably going to trade back below the small bar. I did not say that if you have a small bar and you buy with a stop above 72, since it's probably going to fall below 72, you cannot put your stop below 72. And therefore, you should put your stop 3, 4, or 5 ticks below 72, or simply use a very wide stop and scale in lower. And right now we have a 5-to-close finish. Volume on 78 is 39,000, which is a little bit low, but not terrible. Buy the close, sell the close. It was buy the close on bar 8, 9, 10, 11, 12, even 13. But after that, it's no longer buy the close. So instead of a breakout phase, I would view it as a channel. It probably was sell the close on 25 or 26, and clearly 27, 28, 29. And then we started to channel down. Buy the close, 77, maybe 78, yes, but probably not much more room left for the bulls. Limit order traders, buying below 1. I think it's better to buy 1 point below 1 because you want to be buying near the moving average. Probably buyers below 3. And then here, probably buyers below 13, but I would not buy below 18 because of the wedge top. And then bears tried to sell above bars here and unable. The first time they could was at the 28 high and 31 high, a reasonable sell. And then here, it started becoming less reasonable. Probably sellers above 42, 43 after 3 bear bars. But then you started to get 5-tick traps. And I think it made it much more difficult for the bears to sell. Selling bull closes 54 at the moving average, 60, selling above bars above 50, above 53. And so we're ending up with another doji bar, so 7 bars in our tight trading range. We could still gap down tomorrow and create an island top with this gap up from a week or 2 weeks ago. However, right now, it still looks more likely that we're going higher, but probably not much higher. The more bars that we go sideways here, the less likely we'll reach this channel line and form a wedge. We're already losing a wedge shape here. So, maybe a wedge here, but at this point, it's really becoming more of a parallel channel than a wedge, so less climactic. Excuse me. Tomorrow, what to expect? Well, look to the left. Here's the daily chart. You should expect more of the same, more sideways. We still will probably get, I don't know, I'm going to take that back. I was going to say we still probably will get at least one bull trend day this week, but we only have 2 days left. And I am not going to be here on Friday. I'm going to be gone for the weekend. So I'll miss that. So tomorrow's my last chance at a trend. This is a good reversal up at the end of the day. And when you get these moves at the end of the day, they increase the chances of follow through the next day. So we're finishing today always in long. So we'll start tomorrow always in long. And the bulls will try to get a channel up from this spike. So even if we pull back, bulls will look to buy the first reversal down. Question about reviewing the day from an always in perspective. As I said on the open, we're always in long from yesterday's reversal up, but it was not. I think it was not clear until the close of 8. So always in long, close of 8. Get out below 19 or below 21. Aggressive bears would sell below 21, or they'll start to sell closes. And everyone, if they're trading always in, is short by the close of 27. And if they get out above bull bars 37, they're going to sell again below bear bars 40. This is not a good reason to get out above 44. Here, maybe, but you got to sell again below bear bar. Here, maybe you get out, but sell again below bear bar. Here, the bears get out above 72, but it does not go below bear bar, so they never get short again. And then aggressive bulls either buy above 76 or they wait for 77 to buy the close. Well, that's it for questions, and we're at resistance. And the bulls are still hoping that this is a rally and all of this is a bull flag. And even with all of these bars after that gap up, it's still more likely a bull flag. It's still more likely that we're going higher. I'm sorry about my voice. Lately, by the end of the day, I'm having a hard time speaking. Anyway, so always in long. We'll probably start tomorrow always in long. And we have 2 days left of the year. The bulls would like to close the year at a new all-time high. And I think they have a 50-50 chance of doing that. So that means they'll try to rally tomorrow and or on Friday to a new all-time high. Okay, hope everybody has a good night.